Warren Buffett's shocking warning: why now is the worst time to invest in gold. Warren Buffett, often referred to as the Oracle of Omaha, is not only renowned for his investment acumen but also for his insightful advice that has shaped the way people think about investing. One area where Buffett has consistently expressed skepticism is gold. Despite gold being considered by many as a safe haven asset during times of economic uncertainty, Buffett has long been critical of gold as an investment. Recently, he issued a warning stating that this is the most dangerous time to invest in gold. Let's explore why Buffett has such a strong stance against gold and why he believes investing in it right now is a perilous decision. Buffett's history with gold: a long-standing skepticism. Warren Buffett has always been cautious about investing in gold, primarily because of its lack of intrinsic value. Gold, unlike stocks or bonds, does not produce income such as dividends or interest. Buffett has consistently argued that investing in gold is akin to betting on a commodity that has no cash flow generation. Buffett has often stated, "If you buy gold, you have a piece of metal. You don't get anything out of it except hoping that the price will go up. But if you own a business, you own a machine that produces income." In Buffett's eyes, investing in businesses that generate profits and cash flow is far superior to investing in gold, which only gains value when others are willing to pay more for it. Why gold is considered a safe haven. Gold has long been considered a safe haven asset, especially during times of economic distress or when markets are in turmoil. Historically, investors have flocked to gold as a way to protect their wealth against inflation, currency devaluation, or financial crises. During times of global uncertainty, such as wars, financial crashes, or market crashes, gold has often risen in value as people looked for stability. The idea behind this is that gold, unlike currencies or financial assets, is not tied to any government or central bank and is seen as a store of value. However, while many investors view gold as a safe investment during times of economic turmoil, Buffett has repeatedly pointed out that this is a flawed perception. In fact, he believes that investing in gold can be a mistake, especially in the current economic environment. Buffett's warning: gold is a dangerous investment right now. Warren Buffett recently gave a stark warning to investors, cautioning that this is the most dangerous time to invest in gold. This warning is particularly relevant given the current state of the global economy, the fluctuating stock markets, and the ongoing effects of the COVID-19 pandemic. But what exactly makes this such a perilous time to invest in gold? Moat: the volatility of gold prices. Gold, like many other commodities, is subject to significant price fluctuations. While it is often considered a safe asset, it does not generate any cash flow or profit for investors. Gold's value is largely speculative and driven by market sentiment. Buffett has pointed out that gold is highly susceptible to market movements, often influenced by factors unrelated to its inherent value. This makes gold a volatile investment, particularly in uncertain times. Buffett's position is clear: while gold may temporarily rise in value during economic turmoil, it can just as easily lose value when market conditions stabilize. This volatility makes gold a risky investment, especially for those seeking long-term wealth growth. Rising interest rates and inflation. One of the main reasons Buffett warns against gold is the rising interest rates and inflation that are impacting the global economy. As central banks raise interest rates to combat inflation, gold becomes less attractive to investors. When interest rates rise, alternative investments like bonds or dividend-paying stocks begin to offer better returns than gold, which does not generate income. As Buffett himself has said, the price of gold is determined by the fear factor, and it goes up when people are scared. However, when interest rates rise and inflation is under control, gold's appeal diminishes, and its price tends to stagnate or even fall. The safe haven myth. Buffett also argues that the concept of gold as a safe haven is a myth. During times of financial crisis, gold may perform well in the short term, but its value does not reflect the underlying strength of the economy. Unlike stocks, which can generate profits and dividends, gold does not contribute to the economy in any meaningful way. Buffett compares investing in gold to owning a piece of real estate that generates no income. You don't get anything out of it except hoping that someone else will pay you more for it later, he says. Instead, he suggests that investors should focus on buying stocks of companies that produce goods or services and generate income. These businesses have the potential to grow over time and provide long-term returns. Buffett's alternative: invest in businesses, not gold. Warren Buffett has long championed the idea that investors should focus on businesses, not commodities like gold. He believes that businesses, particularly those with strong management and competitive advantages, are far superior investments. Unlike gold, businesses can generate earnings, reinvest those earnings, and grow in value over time. Buffett's favorite investment strategy is to buy shares in companies with proven track records, strong earnings potential, and a competitive edge in their respective industries. He believes that investing in companies that produce income and reinvest in growth is far more rewarding than owning a non-productive asset like gold. As he famously said, "The best investment you can make is in a business you understand." Buffett emphasizes that rather than chasing the speculative allure of gold, investors should focus on purchasing stocks in high-quality companies with strong fundamentals. The risk of gold as a speculative asset. Warren Buffett's primary issue with gold is that it is a speculative asset. Unlike stocks or bonds, gold does not produce anything tangible. It's merely a store of value that people buy and sell, often driven by fear or greed. This makes it an unpredictable investment, and investors often get trapped by its short-term volatility. Buffett has long advocated for a more disciplined approach to investing. Rather than betting on the price of an asset like gold, Buffett suggests investing in businesses that offer long-term growth potential. Gold, in contrast, does not contribute to economic progress in the same way that well-run businesses do. This makes gold a poor investment for those seeking to build lasting wealth. Buffett's final warning: stay away from gold. In conclusion, Warren Buffett's final warning about investing in gold highlights the risks associated with this traditional investment choice. He firmly believes that gold is not a productive asset and should not be relied upon as a long-term investment strategy. Given the volatility of gold prices, its lack of income generation, and the rising interest rates and inflation, Buffett warns that now is one of the most dangerous times to invest in gold. Instead, Buffett urges investors to focus on building wealth through businesses that can generate income, grow over time, and contribute to the economy. For Buffett, the key to long-term success in investing is finding companies that provide real value, companies that can continue to thrive and produce profits year after year. As always, Buffett's advice is rooted in the principles of patience, discipline, and a long-term approach to investing. For those looking to build lasting wealth, Buffett's guidance is clear. Avoid gold, focus on businesses, and invest with a strategy that creates real value.